So you said a lot of very cool things, and knowing your story, timing is a critical element of your story. And one of the timing that you mentioned was your transition from commodities to real estate, really right after Black Monday, sometime in right '87, I think.
Correct.
So that's it seems like great timing, perhaps, to move into real estate, and then also. I think it was great timing that you went from leasing retail space to JNR to doing a development when the financial district was really developing into a great condo market. I mean, it's maybe not a great condo market now, but it's a stronger residential area now. So all those timings are, you know, critical junctures in your story. And then you mentioned 1031 exchange, and then you also mentioned branching out of New York, which you also did at a critical time, which obviously talking about especially COVID, right? New York, getting out of New York and leading you to other parts of the country. So yeah, I think timing is a really important thing. And you obviously can't predict the future, but I think you have a knack for maybe, like Craig likes to say, seeing around corners and knowing where to be.
I'm actually going to piggyback off that to totally agree with your comment and then take it one step further. 2014, you were in mostly, you said at that point, was it office space? So that was exactly, you buried the lead there.
True.
Transitioning from office space to multifamily.
Yeah, yes, and actually, not only that is that once I got the taste of multifamily, as I told you, I was buying a lot of office buildings on Long Island. And so I started selling all of my office buildings between 2014 and 2017. So I got out of all of the office space. So I guess, Rob, you're right. People have said it that, oh, well, your timing is great. There are a lot of things that went into my decision. Another thing is that a lot of people said to me, instead of just selling out, why don't you just partner with the developer? Leave the money in there and just become part of the development deal. And as you know, a lot of development deals just didn't work out so well. I would have owned office space and condos, retail condos in New York. But I had an experience with somebody in 2007, a friend of mine, lost $750,000 in a development deal. And I kind of look at, when I make decisions, and actually this came up in my office today, and perhaps even with your audience, my commodity trading helped me. Why? Is because when you're a commodity trader, right, prices go up and go down very quickly, not like real estate, but they go up very quickly. That's correct. Here today, gone tomorrow. You have to make decisions very quickly. And I've always been able to make a decision by looking not at my upside, because that's an unknown, protecting my downside. If I could protect my downside, meaning that if I could come up with a scenario that I can live with the loss, then I go forward. So in a development, I couldn't live with the loss, because if the development deal on Park Road didn't happen, I would have been broke. Okay? And I was not going back to being broke. Not that I was ever broke. I always made a fair living, but I didn't want to be broke. So it's not that I wanted to be wealthy. I just didn't want to be unemployed. I didn't want to have a job again. So that was it. And even today, when I make decisions, what's your downside? And you've heard me make some decisions. What's your downside? If you can live with your downside, then you protect your downside, so your upside is unknown. So that's why I didn't do the development. With reference to office, I felt that the profits were much more stable in residential. And therefore, no one tenant can hurt you. Commercial tenants had told me that they were leaving. J&R, my biggest one, told me that they were leaving. I had small tenants telling me they're leaving. Nobody really tells you that in residential. So that's really, I went to play it safe, and while playing it safe turned out to be very, very good for me and for my family.
Well, the other interesting thing as well is when you look at office leases, they're fixed for longer periods of time, as opposed to a tenant can churn through a lot quicker, right? And you can force a little bit more appreciation. And it's also the conversation of luxury and necessity.
In real estate or in anything, it's all about leverage, right? Who has the leverage? And I felt that in office space, especially when I learned my lesson, is that the tenants have, right? You can give somebody a 10-year lease, and but if they want out, all they have to do is either they go belly up or they want out, you'll give them 3 months, whatever, they're gone.